Looking at the next 5 years, I think we'll see a couple of things.
You will see a huge disruption in financial services.
Big tech companies continuing to enter this space.
Greater democratization for financial services for everyone.
The emergence of more niche players.
The ability to stand up infrastructure, the ability to pass all the regulatory hoops, etc., will be massively reduced.
We're just scratching the surface right now.
But I think it's a really bright future.
Banking as a service now is still somewhat of a niche, but I think over time it will become part of the standard portfolio of capabilities that every major bank offers.
There's going to be a lot more demand. More and more banks will want to explore this revenue stream as a really great way to distribute their product in a compliant and profitable way.
Banks will begin to shift away from our current paradigm where they're effectively operating in a B2C space where the name of the game is customer-facing operations, having this kind of big real estate footprint and being close to customers, and we'll shift to much more of a B2B paradigm where you need to be a good partner with other kind of fintech players in the space, such as a Galileo, a Marqeta, a Synapse.
And so banks will serve some customers directly through their branded channels and through their physical and digital properties. And they'll serve other customers indirectly through their relationship with partners. And that's just going to be the way banking is in the future.
Yeah. So what are the biggest changes we see here at Marqeta in the next kind of 5 years in banking as a service? I would point to a few things. I mean, I think we as consumers tend to associate all of these innovations with the things we see in our daily lives, but is the things that we don't see, the B2B payments, which is, just kind of dwarfs all consumer payments. How does that get streamlined? What you might end up seeing is an interface between the streamlining of B2B payments and better consumer experiences because there's more efficiency in the supply chains.
Looking at the next 5 years, I think we'll see a couple of things. We'll see the emergence of more niche players that really hyper-serve one type of customer. Secondly, aggregation of these niches. Where does this aggregation sit? And where do I start to automate some of my finances? And then the third one will be a generational shift in infrastructure. And when I say infrastructure, I don't mean technology. I mean, yes, we're seeing entrepreneurs build new technology, but what about the financing side? What about the financial products? What if that starts to shift in a way that the technology already has? And what if we saw some partnerships on the back end that really enabled 1 and 2, which is our kind of aggregation and our increasing niches? What would that mean?
So I think 5 years' time, it'll be primarily the next generation challenger banks, the people pushing intelligent digital services, people who are pushing these embedded template flows that will be sitting on top of these BaaS stacks, and some bigger organizations starting to come through.
So I think what you'll see is that those neobanks beginning to monetize their existing customer base with other products than are currently offered today. And then the final player I'd point to in this kind of banking as a service evolution is the big tech companies continuing to enter this space, such as has already begun happening, but I think this will happen more and more. These companies are very good at UX, figuring out what customer needs are and solving those. And I also think that given their large user bases, this presents a very compelling chance to further monetize the very costly gains they've made in terms of user acquisition.
And then the last area is around continuing to build out like world-class infrastructure, which I think we're very much a part of, right? Where we're building the infrastructure that allow a lot of this innovation to happen. And I think the level of execution and the level of innovation will only continue to go up there, and it will make it easier and easier to build those modules that then get put together, right? So if you view Plaid or kind of the core kind of infrastructure layer as the means to building kind of the individual modules, and then it's about combining those modules in a way that create the best user experience, I think you're going to continue to see a lot of meaningful progress across all three layers of that.
And I believe in the future, the best platforms win. So we have to get our financial institutions the best possible open platform. Nobody's going to be allowed anymore. It doesn't matter if it's in the Jack Henry community financial ecosystem context. It doesn't matter if you're a fintech, a challenger bank. The big banks are all going to have to get to open APIs. Net new vendors are just not going to be able to get away with not having open platforms. It's just going to be, sort of table stakes. And as people get educated and understand the importance of it, you just won't be able to live on the landscape and build a business without it. And then if that happens, then the rest of it starts to stitch together. And I think we get a much better world.
I think 5 years from now, we'll see barriers come down, continue to come down to make it easier and more seamless for brands to bring financial services to their customers. And we're going to see banking embedded in even more ways across all of our daily lives.
I think you will continue to see embedded finance take hold in all aspects of kind of customers and businesses' financial lives. It will be something that customers will come to expect.
My personal view is the future of banking will be a connected ecosystem where you put the customer in the middle and you really start to think about what are all the services they need on a day-to-day basis. I think the average number of financial apps on a mobile phone is something like 14. And I think the idea of open banking really allows you to start thinking about how do you bring those services together in order to further the agenda and serves the customer differently.
I mean, the reality is, the community of unbanked and underbanked in the United States is still fairly large. And so I think there's room for more choices for people of all sorts to actually, consume financial services.
And really what I'd love to see is actually if banking as a service can reduce the cost of taking something to market, reduce the time taken to get something to market, that we'll be able to think about providing financial services for audiences that are currently not really addressed because they're not commercially viable. And that's where I think banking as a service has a huge opportunity to play into that financial inclusion space, which is really exciting for me.
And so ultimately, I think this leads back to, consumers win, because if brands are wrapping financial service as part of like the core product, consumers will get the benefit of that competition.
Since the last 12 to 24 months, we're seeing more and more competition, which is great, which only confirms that this market is really strong and important. And in that growth and competition, we will likely see the first acquisitions, mergers of companies in that space, and we will very likely see very few dominant players in the realm that will likely be somewhat separated on geographies.
I definitely think as it relates to international expansion, it's on the minds of every one of these kind of banking as a service providers. Many of the potential clients in this space are looking for that kind of capability. If you think about the big tech companies, they operate on a global scale, and they are hoping that they can integrate to one provider to turn on their financial kind of services capabilities instantly in all their different geographies that they operate.
It's definitely possible to become a global player. It's not easy. We have how many really global banks do we have? It's a couple of handful, but it was also a 100-year journey to become a really global bank. And banking services will not take hundreds of years, but it will take a few years.
So to the extent that you have platform providers who can solve the international kind of complexities and make all of that kind of abstract away all the difficulty away in their own platform, I think that will be a very compelling value proposition.
The challenge is now not in the technology capability. The challenge is in the regulatory environment. Where we look in other countries, you're having to actually get the regulatory approvals in each country, which then is what slows down the ability to just be able to do an update to your app and roll out, and here you go, you're now offering financial services products as part of your offering.
When it comes to banking regulation, you will be surprised how different countries are, which even makes it a little bit hard to step from country A to country B. It's not very straightforward. That's why I think that we will see likely a somewhat splitted picture across different geographies.
What I am confident will begin to happen is that players like Galileo, like Marqeta, like others, will begin to solve some of the regulatory issues and differing locales, and you can integrate with one provider, and that provider will make all the capabilities necessary to go abroad available through their interface. And so it will become much more like a pressing of a button to turn on a different geography, as opposed to the very kind of heavy investment and pain-intensive process that it is today.
And I don't think the current legislation and regulation is there for platforms. We need to be regulated to a different level because we have a lot of dependencies on us.
And we've got to give oversight of people who happen to be using our licenses as well. That's something I think we need to work together with the regulator to try and develop a sort of platform, robust, living will like you have in the bank.
Yeah, I think that's an area where we're going to see a lot of change, whether it's in terms of harmonization or in terms of reciprocal arrangements between different regulators. It will happen over time, but it will take time.
What it really comes down to is which businesses are going to be able to keep up with the change in the customer need, and how are they going to really pivot and adapt their business. And I think like any business, it's going to be a mixed bag. Some will embrace it fully and would want to be the front and center brand for these customers. Some would want to be the back office, the back end bank for these customers, while others would just completely fail to innovate and kind of over time reduce their market share and potentially go out of business.
I think the winner in all of this really is someone who can lead a connected ecosystem that is comprised of technology, fintechs, and understanding the need and really understanding the journey the consumer wants to go on.
I think we're actually in the early days of fintechification of all of these consumer companies. And so it is a bit clunky today, but it almost reminds me of the early days of the internet, where we were figuring out how DNS worked and creating websites. I mean, you probably had a server rack that was hosting the website, and if you tripped over the cord, your website would go down. And so it was quite clunky and quite difficult. That's where I feel like we are today. And sometimes people trip over cords and the website goes down. And it's like, well, maybe making everything a fintech company is a bad idea. And in reality, we're just so early.
We're just scratching the surface right now. And I think there's a long runway ahead of us of future innovation of what we can do in this space.
What we've got at the moment is the vague shadows and outlines of what the future might be. People can see there's going to start to be this stratification of the different layers. I think you're going to get proper execution on that.
It's a little bit clunky today, but I think it's a really bright future, and that everything is going to be a little bit smoother and a little bit more powerful for consumers.
What we have now is an order of magnitude better than what we had 5 years ago, but it will be 3 orders of magnitude worse than what we have in 5 years' time.